Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 21st day of August 2018, and this is the Daily Report for Gold and Silver. We do have a nice upside move in gold today, currently trading at $12.0220, putting it up about $7.60 on the day. It is traded to a high of $12.0310 and a low of $11.9430. We did send out a special trade alert this morning recommending that you initiate a long position in gold just under 1200. We'll talk about that in detail as we pull up our technical studies. Silver also tracking higher on the day, up about 10 cents. Still under $15 though, but trading at $14.77. Palladium did trade higher today, gaining about 0.75% at $9.05. And finally, platinum did close higher at $7.95 on the day. Now, highly supportive of these higher pricing is a real decline in dollar value. Now, really for the fourth or fifth consecutive day that we have seen lower pricing. Dollar index at 95.14, which is a net decline of 64 points or almost 0.7%. Now, in terms of U.S. equities, they did close marginally higher, a 63-point gain in the Dow Jones Industrial Average, closing at 25,822. Standard & Poor's gaining about 6 points at 2862. And finally, the NASDAQ gaining over 0.5%, a 41-point gain at 7862. Traders, we do have a nice move in gold. Gold still trading, currently up about $8.50, $8.60, currently at $1,203.20. We did send out a special trade alert this morning recommending that you initiate or buy at the market December gold. Traders taking that call got in anywhere between $11.9950 and $1,200 per ounce. As I said, we're currently at $12.0330. We're now on a new high as this market does track higher on the day. In terms of my initial target, what I am looking for is a real possibility that we'll see gold track to about $12.20. 1218 is that 61% retracement from a very long data set. I have also included another Fibonacci retracement, and this Fib retracement is simply looking from the highs at 1369 here and tracks to the lows, and that of course is going to be in red right here. So the first level is a 23% retracement that comes in at 1213.60, and then 1244 is the 38% retracement or retracement of this decline. So our basic targets are going to be as follows. I do believe that 1220 is quite achievable, but we could see some sort of resistance come into the market should the market continue to rise, of course, at about 1213, between 1213 and 1218, and then we might see one more cluster if we get a continued rise above that between 1244 and 1247. Now, in terms of stop placements, my recommendation was to put it at 1177.13, and the rationale behind that was to put it below this support level that we found at the 0.78% retracement, and that comes in at 1178. So we're just putting it slightly below that. My recommendation is obviously to maintain our current long position and to maintain our current stops. I do apologize in that I did send this out by email, but I do not believe that I sent it out by SMS. And traders, while it is quite clear that we have seen a pretty resilient bounce from gold after hitting these lows at 67 and then popping up, that came in, of course, a week ago on Thursday. We commented on what a pivotal candle that was because it really indicated the point in time in which the bulls managed to gain control and the bears relinquish control from current pricing in gold. However, it has really been based all upon dollar strength and then dollar weakness. Of course, the move that we saw coming down as gold traded from 1370 down to these lows of 1167 was in fact dollar strength, and now we're seeing some dollar weakness. I've just gone ahead and pulled up our daily dollar chart, and you can see that we've had solid red candles for the last 4 days, and in fact a week ago Wednesday, since hitting a high of 96.86, we have seen this market come under pressure and track lower. We could see some potential support come into the market around 95, and we can see that the low today came in at 94.96 in this area. We can also see these series of tops that showed us that this level right here, right above 95, were absolutely an area of resistance, and one man's ceiling is another man's floor. So we'll have to see if we get continued downside pressure in the dollar. In fact, we do. Our real target for the dollar comes in at around 94.04. And that is a 38% retracement, and that is also using a fairly large data set. And traders, although silver is trading higher today, gaining about 10 cents, it is still tracking under a critical area of resistance that I am currently pegging at $15 per ounce. We are currently tracking at 1476. We can see that it really fell out of bed and below all of the recent lows in the market. In fact, we have to go back to some lows that came in silver back in 2016 to match the areas where we're at now. And my sense is, although the market has moved higher, I am not a strong bull in terms of silver unless we see it effectively trade above $15 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.